Bitcoin just crossed $66,000. Not because of a crypto breakthrough, not because of a new institutional buyer, because the United States and Iran just made peace. Think about that for a second. A geopolitical ceasefire moved the price of Bitcoin, and that detail tells us something enormous, something that most people tracking today's market headlines are completely missing. Today, markets exploded higher on news of a preliminary US-Iran peace deal. The Dow surged toward a 500-point gain. The S&P 500 jumped. Oil prices dropped sharply. That part makes obvious sense. Less war tension means cheaper oil. Cheaper oil means lower inflation pressure. Lower inflation pressure means the Fed stays calmer, and calmer Fed expectations push stocks higher. That logic is clean and easy to follow. But Bitcoin rising alongside stocks on a peace deal, that is worth stopping on, because it was not supposed to work this way. Let me take you back a few years. Not long ago, Bitcoin had a very specific reputation. It was called digital gold. It was called a safe haven asset. The theory was that when traditional markets got chaotic, Bitcoin would rise. When governments destabilized, Bitcoin would absorb the fear. When currencies weakened, Bitcoin was the escape valve. That was the original geopolitical story around crypto, and for a while, it even made some sense. During early moments of uncertainty, Bitcoin would spike. Retail investors would pour money in looking for an alternative. But then something kept breaking that theory. Every major market crash from 2020 onward took Bitcoin down with it. When the S&P 500 crashed, Bitcoin crashed harder. When fear spiked, Bitcoin sold off alongside everything else. The safe haven story started to look shaky. So what actually happened over time? Bitcoin transformed. It did not stay on the fringes of the financial system. It moved closer to the center of it. Institutional investors entered the market. Bitcoin ETFs launched and pulled in hundreds of billions. Pension funds and sovereign wealth funds began taking positions. What was once a retail-driven speculation became a recognized asset class. And when that happens to any asset, its behavior changes fundamentally. It starts moving with institutional money, and institutional money moves on macro signals, on interest rate expectations, on geopolitical risk appetite, on the same inputs that drive stocks, bonds, and commodity. Today was a textbook example of that transformation playing out live. The Iran deal removed a massive geopolitical risk premium from global markets. Institutional investors re-entered risk assets across the board. Stocks went up. Bitcoin went up. Not because of a crypto catalyst, because the macro environment got friendlier, and Bitcoin is now embedded deeply enough in institutional portfolios that it moves when those portfolios move. That is a completely different asset than the one people debated 10 years ago. Hold that thought, because there is a second layer here that matters just as much. Bitcoin rising on a peace deal also tells us something about what investors were holding it for. During the US-Iran conflict and the Strait of Hormuz tensions, global markets were pricing in serious risk. Energy supply uncertainty, inflation fears, potential for broader regional escalation. During that period, some investors allocated to Bitcoin alongside gold and energy stocks, not as a safe haven in the old romantic sense, but as a hedge against dollar instability and prolonged energy-driven inflation. When the peace deal landed this morning, that inflation hedge trade partially unwound. Oil dropped 5%, treasury yields eased, and Bitcoin moved higher alongside equities because the risk-off position was no longer needed. Portfolio behavior. It is not retail speculation. It is institutional rebalancing in real time. And here is where this becomes practically important for everyday investors. If you are still thinking about Bitcoin purely as a high-risk lottery ticket, the market is operating on a completely different assumption. That gap between how regular investors perceive Bitcoin and how institutional portfolios actually use it creates a real financial blind spot. It means people on the sidelines are consistently surprised by Bitcoin's movements. It means people holding Bitcoin have no framework for understanding when to expect it to rise or fall. And without that framework, it is nearly impossible to make rational decisions about how much exposure actually fits your situation. If you enjoy breaking down markets and money, subscribe for future updates. So what is the practical takeaway from what happened today? First, pay attention to what Bitcoin correlates with in real time. Today it moved with stocks, not against them. That tells you where it sits in the current market structure. Second, recognize that Bitcoin at $66,000 is not the same story as Bitcoin at $66,000 5 years ago. The buyer base is different. The use case is different. The risk profile has matured considerably. Third, understand that Bitcoin is now part of the global macro conversation. Geopolitical events, Fed decisions, inflation data, All of these now move Bitcoin, not always dramatically, but consistently enough to track. For someone building a long-term portfolio, this matters for one specific reason. Diversification only works when your assets move differently from each other. If Bitcoin now moves more like a high-growth tech stock than a safe haven, that changes how much diversification benefit it actually adds. It does not mean it belongs nowhere in a portfolio. It means you need to be honest about what role it is actually playing. That question is worth sitting with, especially on a day when a Middle East peace deal just sent Bitcoin to $66,000. The market told us something real today, not just about peace deals and oil prices, but about how Bitcoin has quietly grown up inside the global financial system. The investors who update their understanding of this asset now will have a real advantage over those still using a framework from a decade ago. That is what the numbers are showing right now. What you do with that information is up to you.